LTI Mindtree and Emphasis surge as JP Morgan upgrades both the stocks to an overweight rating. The brokerage sets a target price of 6,900 rupees for LTI Mindtree, while that for Emphasis is set at 3,400 rupees per share.
AU Small Finance Bank rallies as deposits grow nearly 13% sequentially. Assets under management also grow 5% on a quarter-to-quarter basis.
Macrotech developers surges as pre-sales grow 21% year-on-year, even as the company says it remains on track to meet its full-year guidance of 20%. Godrej Properties shares rise even as bookings and sales volumes slump sequentially.
Natco Pharma surges as Mylan and Novo Nordisk reach a settlement over Ozempic generic in the United States. Remember, Mylan and Natco have partnered on the development of the generic Ozempic products.
NBCC surges as the stock goes ex-bonus in a 1:2 ratio effective today.
Hello and welcome to Chartbusters. I'm Nigel, with me is Mangalam, and the markets are a little bit skittish this morning, a little bit nervous as you can see. The Nifty as well started off with a gain of close to around 80-90 points. Now it's moved into the red. Will this dip get bought into at some point of time? Well, time will tell. The problem today has been actually the broader markets because the mid-cap index is now down 1.3%. But Mangalam, I think on the Nifty, this 24,700, 24,800 mark is extremely crucial that it's held out.
Let's see where it goes, because it's more than the opening. Increasingly over the last couple of days is the way the market closes. That's becoming a lot more important. On Friday as well, we saw a near 500-point decline from the highs on the Nifty. The Nifty bank fell about 800 points as well. 25,000, very close to the 50-day moving average is where we are on both the frontline indices. Let's see where we go from here. But the problem, like you pointed out, has been the broader markets. Nearly 2,000 stocks in the red for just about 371 in the green itself. So with a lot of stocks actually declining, let's get to the brass tacks. Let's talk about fundamentals, let's talk about demand, and let's talk about business itself. BKG Foods, that stock's been buzzing over the last 1 month or so, and that's largely ahead of the upcoming festive season. A lot of things happening in the industry itself. So let's talk about the demand picture and the outlook for the business going ahead. We have Manoj Verma, who's the Chief Operating Officer at BKG Foods, joining in. Manoj, the last 1 month, there has been a lot which has happened. From the last time we spoke to now, one of the biggest players in the market, Pratap Snacks, had a large chunk of their investors go out. We had Madhusudan Kela and another fund go ahead and invest in that company as well. So two-part question. One, what does demand look like for people like you ahead of the festive season? And secondly, how does this deal in Pratap Snacks change the dynamics of the industry?
Yeah, good morning. First, I'll take the second question, which is on the demand. I think demand is really good. There's a lot of excitement around in the market amongst our business partner, which is the channel partners, the moderate accounts, and the general trade. So that looks very good. We are now just 3 weeks away from the D-Day, which is Diwali, and everyone is on top of it. I mean, there's a lot of loading. As I visit the market, I go to the stores and see. So not only BKG, I see a lot of competitive stuff also in the marketplace.
That's about demand. And what about the industry dynamics? How does that change?
Sorry, on that Pratap Snacks, it actually doesn't matter to us. I mean, they were our competitors. I mean, they are there in the industry and will continue to be. It's only about the management which would perhaps change. To be very honest, it doesn't impact us at all. One, that the categories they are playing in, which is primarily Western snacks, has never been our very large share of business. It's a very small SOB for us. And secondly, the business was there before as well and would continue to be there. It's just the management change.
Okay, all right. Hi, Mr. Verma. Good morning and good to see you, Ben. What kind of growth are you working with for the year? I think earlier you were indicating low double digit is what you're working with. So should that be the volume estimate, 12, 13, 14% odd? And what about pricing growth? What are you working with for this year, FY25?
See, we are in a silent period. I may not be able to speak about growth specifically, but yes, when we talk about growth, we would continue to deliver, what we have said. We are bang on what we have planned. The festive season is more on the gifting and on the sweets part. So that has done extremely well, and they definitely would be the growth drivers.
All right. So then how much is gifting as a proportion of your sales and how much is sweets as a proportion of your sales? What do they do to your margins? Because the festive season is all about sweets and the gifting.
So at an annual level, if I talk about the sweets contribute to about 12.5%. However, during these festive days, they go up as high as about 25% also. So therefore, it's a huge chunk, or huge share of business during these months.
And gifting?
So we look at gifting and sweets together, but yes, gifting is a smaller one. In that case, so gifting, if we put together between these 2 months is about 5% they contribute.
Okay, all right. Mr. Verma, you have plans with regard to improving your EBITDA margins as well. But edible oil companies have begun to see mild price increases. How has it impacted your business, and what kind of EBITDA margin improvement are you looking at from here on?
Talking about oil price increase, that has impacted across players, and so us. Beyond the point, company would not erode margins, and therefore, we'll have to pass it to the consumer. What we see that these price increases should impact, say, around 2 to 3%, price increase.
So what does that mean for your margins? Because 2 to 3% is the price increase that you're looking at. The first quarter, you did margins of close to 16%. That was a near 140 basis points improvement over the same time last quarter. With prices having increased, how much has your raw material basket increased by over the last couple of months? And how long before you increase the prices? I mean, what is the margin band that one should roughly look at?
So margin band, so if we look at without PLI, it was about 13.5. And we would stay around the same because the price increase, as I said, will be passed to the consumer. We have already started taking some price increase and it has started going below. We had certain buying a certain product, these stocks with us, which we had booked earlier. So therefore the impact does not happen with no immediate effect. It takes some time, and we are we hold stocks till then, and thereafter the prices we have increased already.
Okay, export market, that's a very small proportion of your mix, but it gives you good potential to go ahead and even feed the world. So what is it currently? Where do you see this number headed? And also give us a brief idea about reach, because you all were talking about expanding your reach. So numbers on both these two.
Yeah, so as of last quarter end, we were directly covering 2.7 lakh outlets, and the target for this year by end of the year is we should be covering 3 lakh outlets. We are well on track. That's in terms of our direct reach. However, the indirect reach, what we spoke about, was 1.1 million outlet, and that we assume that about 50,000 outlets should go in our indirect reach as well. Here the game is two-pronged. One is reach, so the inorganic growth, the stores which were not selling BKG will sell, and the other is also throughput increase. So the stores where we were, how's that we increase throughput per store? So that's the growth drivers, the two levers we are working on.
All right, and on the channels itself, a lot of these FMCG companies have been saying that they've seen big traction in e-commerce, most notably quick commerce. So how much does that account for your overall sales, and how are you ramping that up for you?
Yeah, Q-com has done very well, over last 1 year, and it's growing even faster. Though it's a very small business, to our business, it's about 2.5%. That's the share of business to us. But during these festive times, these will also be going up, to say about 50 basis point will increase further.
And what rate is it growing at, Q-com, for you?
So if I talk about over last year, we've grown at about 250%. So it's an obnoxious growth because of very small base. And these growths are coming, again, from two sides. One is that this Q-com span of area or span of service, these people have increased and increasing month on month. And other is that, the penetration, the more category loading and the throughput from this Q-com, that's also increasing. So these are the factors which is really spiking the growth in this Q-com channel.
Well, the reason why we're talking about this is because very recently Dabur had to rationalize its GT inventory because of fast growth in quick commerce. Obviously, it accounts for just about 2.5% of your overall sales. But I wanted to understand what kind of products sell on your Q-commerce platform. If their contribution increases, then will that have a positive impact on your margins? Because the sense that one gets is that Q-com has, not a lot of these low-value products. They still have some of the premium products.
Yeah, so QCom normally doesn't sell small value packs. So 510 will never be a QCom game. It'll be the large packs. That's one. Second is QCom is more of an impulse buying. Suddenly I thought of buying something, I'll place order on that stuff. So how we look at QCom as a channel is also is helping category grow, because many a times you would choose not to have it because you do not have pantry or there in your house and you don't want to step out, but QCom gives you that space that within 5 minutes or 10 minutes you can get that stuff home. So that's the opportunity wherein category also grows, but at the same time it does impact general trade, and there is a noise wherein the general trade or these small retailers, they definitely are getting impacted because of this channel.
All right, we're getting feelers every week on a new list of buyers emanating for Haldiram's. Have you heard anything? Because the last news report was that Sensex is looking to invest in that. Anything that you heard on that space?
Those are the news you often, every month you see some new name coming up. I mean, till such time it happens, I think we all will have to wait and watch.
But it's on the anvil, right? Something is likely to happen soon.
I can't say on that stuff, not that I'm aware of.
All right. Thank you so much, Manoj, for joining in. Wish you and your team a very happy festive season and hope the demand actually pans out as you are anticipating. And even better than that, it'll be good for consumption, good for your company, but more importantly, good for the country as well. We'll take a short break on that note. In fact, before we do that, let's talk about some ideas of profit coming in from our colleagues at Money Control Pro. Bharat joins in with a stock that he's tracking closely. Bharat.
Today's item is Lemon Tree Hotels Limited. While the company witnessed margin pressure in H1 owing to higher renovation and employee costs, as well as increased investment in technology, we expect significant improvement in the second half. The growth is expected to pick up significantly in the second half, as it is a seasonally strong quarter. Also, the renovated room inventory in H1 can be utilized for generating higher pricing in second half, which would support the performance. The industry upcycle is expected to sustain over the next few years. Demand is expected to grow at a much higher pace of 11% CAGR, while the supply is expected to trail, growing at 8% CAGR over the next few years. The company has highlighted healthy room addition plans and aims to add about 4,000 rooms, which is about 40% of the current inventory. The entire room addition is planned via asset-light management contract group. With minimal capex requirements and healthy cash flow generation, the focus will now shift on debt reduction. The company also plans to list the asset-heavy fuel subsidiary in the future, the proceeds of which would be utilized for further debt reduction. The stock has significantly underperformed, correcting by about 22% in the past 3 months. At the current market price, the stock is trading at an EV by EBITDA of 16 times FY26 projections. The valuations are attractive at the current levels. Investors can add the stock.
All right, brother. Thanks a lot for that. We'll take a short break. On the other side, we'll get you snippets from our special interview with BK Goenka, chairman of Welspun World. Don't miss it.
In an exclusive chat with CNBC-TV18, Mr. BK Goenka, the chairman of Welspun Group, says that he expects the group revenue to triple in the next 3 to around 5 years. He also spoke about the listing of the US business, the capex plans for Sensex, and how he sees Welspun Corp ramp up from here on. Let's listen in to a few excerpts from that conversation. Well, Mr. Goenka, you briefly mentioned about Welspun Corp, and that's something that the street is quite bullish on. Now, you'll just won an order in the United States, and that was a whopping 2,400 crores. But what the market believes is this is just the start, and there is more to come. There could be $1 billion of order inflow in this calendar year itself. Do you concur?
See, I want to tell you one thing, that we are one of the very formidable force in when the US market comes, when the Welspun comes. We are one of the major player in the oil and gas, transportation of oil and gas pipes when it comes. So looking to today's market, US market is quite bullish. in the overall pipe market when we talk of particularly from the gas from Permian Basin. And apart from that, there are many new projects coming up in the new energy. Over and above, there's a huge potential from the angle of carbon capturing.
Right.
So we feel very comfortable. I think we have bidded for many projects. I mean, I can't say anything like today at this juncture, but in a overall market size of more than $3 billion, I mean, you go on bidding and something you win, something you don't win. So it's very difficult to say what is going to happen, but we are in a good position in US.
Well, but it wouldn't surprise you if you won a big order before the end of this fiscal, amounting to close to around $1 billion odd. That's what the market believes.
I mean, we have bidded for, as I said, more than $1 billion projects. I mean, what comes, what not comes, is very difficult to say that, but we are looking good in many of them.
All right. Since you'll have such a good position in the United States, do you think that maybe at some point of time you could be looking at listing this entity in the US? Could that be something on your mind?
Not really. I mean, at this juncture, there's no plans.
Well, Welspun Corp has close to 31% stake in the Middle East business. What's the plan out there? Do you plan on divesting that 31%, or do you believe that it depends on the size of the check? Then maybe you'll sell that out.
No, not. That's really, I mean, as you know, we are one of the global players in the oil and gas market. And Saudi or Middle East is a very important and strategic market for us. I mean, there is no plan as such like that. But definitely, it's a very important from the angle of our overall strategy in the global market. So it's doing very well. I mean, it's almost booked for next 3 years. And we are one of the, not only the formidable player, but we are one of the first choice for the customer.
All right, very important. Let's talk about Sensex then, because Sensex is something that could be the big value driver from here on. You're putting more than 2,000 crores in that business, and that has a brand recall value. The market size is immensely huge as well. What's your outlook with regard to Sensex? And this is something that the markets are waiting for. What is the outlook? What is the asset turnover? And what could be the EBITDA profile of this business? Because you're putting big money in here.
So, well, Sensex is as you know, is a synonymous with when you talk of storage tank, water storage tank, you say Sensex layout. It's a synonymous with water tank. And it's the oldest and the first, I mean, who created the water tank. It's a 50-year history behind Sensex. And it's a very well-known brand. And as Welspun, when we acquired a year back, I think we have a huge plan behind it. When we see the Indian market today, the building material market, whether it is PVC, OPVC, CPVC, all kind of water-related pipes and businesses, we see a huge potential. And market is growing almost like 15 to 20% every year. And we see a potential in that. And accordingly, we have already announced a capex plan of more than 2,500 crores in next 3 years. And where we will be coming out a complete bouquet of the whole related items, which is building related items like all kind of pipes, fittings, adhesives, storage, water storage tanks. So it is a. I think we are in our overall portfolio of group. One of the things was missing was B2C brand. I think Sensex has given us that, and in next 3 years' time, we feel that we will be growing that business more than 20%. In next 3 years' time.
So asset turnover of around 2 times, could it be a 5,000 crore revenue potential with margins of mid-teens? Would that be a target that you have?
I mean, that's the fair target for our team. We are going to have it, and it may happen in 3 to 5 years' time.
Do you think at some point of time the value of Sensex itself, since it's in building products and it gets a higher multiple, do you think you can unlock value, maybe list it separately once it starts ramping up in terms of revenue, and maybe that asset could be far more valuable?
I mean, whatever's going to be right from the angle of shareholder. As we all know, B2C multiples are different. There's a different kind of product, and this is a 100% subsidiary of Welspun Corp. And at the right time, whatever is good for the overall shareholder, unlocking the shareholder value, we will take whatever necessary or whatever the decisions. Board will take that time, and we'll do the right thing, which will create value for everyone.
Well, Welspun Corp, between FY24 and FY25, there's not going to be much growth because you're waiting for those orders to come in from the United States as well. But now you have a ductile pipes business that will fire. Sensex as well will gradually start contributing, and the US business will start ramping up. Put everything together for FY26, can we expect the EBITDA number for Welspun Corp be closer to around the 3,000 crore mark? Would that be gettable?
I think whatever the projects, whatever the expansion plan we have announced, we are very good to go around 15 to 20% growth all around. whether it is top line or EBITDA. And we are quite confident when we see the Indian market for the DI pipes, when we see our US businesses, when we see our Saudi businesses, and moreover, the Sensex is also coming up well. So I think all put together, we are in a good position.
And what about you have another smaller listed entity, Welspun Specialty, the stainless steel part of the business. That is a niche one, you have turned it around. Could you be looking at folding that business into Welspun Corp?
I don't think so. I mean, it's a business which is very, very special. And in recent past only, we could turn it around. And it has been making losses for many years. And today, we are proudly, I can say that this is a company which is looking for the new business, which is under the Atmanirbhar government policy, Make in India, whether it is for nuclear, whether it is for defense, whether it is for power. I think we are in a good position in times to come in that business, particularly in stainless steel and related items.
So you believe it has a niche, you'd rather not merge it into the Welspun
I mean,
Corp?
definitely it's a niche market and it's already a separate listed company and which is already reflecting the value.
Well, you can catch the full conversation with Mr. BK Goenka at 4:30 p.m. today, only on CNBC-TV18. Well, all right. Well, let's focus on the markets. The markets actually have seen a bit of a nosedive in the last few minutes. We're down below the 24,900 odds. So the initial pop that we got was used to be sold into. Adani Ports has moved to the low point of the day. So pull up the intraday chart out there. ONGC, these are stocks that have taken a sharp knock in the last few minutes. So we'll just get the intraday chart. Coal India as well has, done a U-turn of sorts. And when we started the show, one of the few indices that was in the green was the Nifty Bank. That's moved from around 100 points higher to around 170 points lower. And when the Nifty Bank does a U-turn, that's what put pressure on the Nifty. Just take a look at that. Sharp downtick on the Nifty Bank. That's the one that's dragging the index right now.
Absolutely, Nigel. From the highs, almost 550 points lower from the highs of date for the Nifty Bank. For the Nifty itself, down almost to 220 points from the highs. What's interesting is that when we started the show, we had about 1,800 stocks in the broader markets which were declining. That number is now swelled to close to around 2,200 itself. And the number of stocks which were gaining from 600 has now come down to around just 230. So that's a fair amount of distribution that we're seeing even in the mid-cap end of things. It wasn't doing too well to begin with, and now the mid-cap index has now expanded its cut to about 1,350 points from the highs. Mid-cap index itself is down about 1,800 points. You have just about 4 or 5 stocks in the F&O space, in the F&O basket, which are in the green, and that too with a small amount of gain. The highest gainer in the F&O right now is AU Small Finance with a gain of almost just 1%, but a lot of stocks, so over 200 stocks, are under pressure in the F&O basket as well. Take a short break, come back, we continue our focus on the markets itself. A sharp sell-off is what we're seeing. Welcome back. You're watching us here on Chartbusters. As we run out of time on the show, remember the market's also running off steam. In fact, a big cut is what we're seeing on all the frontline indices. The biggest one is atop my head, which is the mid-cap index. A lot of distribution is what we're seeing out there, down 2.5% for the Nifty as well as the Nifty Bank, down by 500 to 800 points from the highs. For the Nifty Bank, the Nifty down about 200 to 250 odd points as well. We wrap up on this edition of Chartbusters. Thank you for watching. The team of Trading Hour will take all the market action ahead.